Sales tax payable, problem 1. Watermelon Company had cash sales of $15,500. This amount is before considering sales taxes. The sales tax rate is 10.4%. What amount is debited to the cash account? This one's pretty straightforward. All it's asking for is the total amount that's debited to cash. And the idea here is just understanding what's going on. Watermelon Company had cash sales of $15,500. And we're told a sales tax rate. Now think about sales taxes. You go into a store, a restaurant, you have to pay sales taxes. The customer is the one that pays that. We're looking at the actual business. The business collects the sales taxes from the customer and it basically remits it and it transfers that money to the government. Under law, it has to do so. So the idea here, and I don't really like to do debits and credits and journal entries, but if you think about what's going on here, it's going to help you get the answer. The cash sales, that's going to be the revenue. So revenue would be recorded for $15,500. Now, if you went to a store and you bought something for $15,500 that's subject to sales tax, you're going to pay sales tax on that item. So we're looking at the business here. We're looking at the business. And when the business, it collects sales taxes, it also has to record a respective sales tax payable because that money that it receives from the customer, it's not the company's money. It goes to the government. And again, under legal obligation, they have to transfer that over. So it creates a liability. We call that one sales tax payable. So the sales tax liability account or sales tax payable account, that is money that the company receives from the customer, it remits it, it's holding it, and it's going to transfer it. And the reason why it's not directly transferred immediately is because think about a business that does lots of transactions. Think about a retailer. Lots of transactions going on each day. It doesn't make sense every time a transaction occurs to send the money over, send a check over to the state department that collects sales taxes, that whatever respective state Department of Revenue that collects sales taxes. It makes more sense at the end of the accounting period or end of a month or end of a quarter to send a large check for hundreds of thousands of dollars if it's a large business for the amount that's owed. Obviously, we keep track of each transaction to determine the amount that's owed to the government, but it doesn't make sense, again, to just send the check over or send the amount over. It'd make it very inefficient. So the sales tax payable here is just going to be $15,500, the amount of revenue on the transaction, times 10.4%. That's all we're going to do. We're going to calculate that. And that equals $1,612. So 1612. And the idea is the question is asking for the cash. How much cash should be received? What is the debit to the cash account? And that would be the final journal entry. That's what we're looking for here. We're looking for the amount of cash. So we just sum up those two numbers. We sum those two. We get the sum. And that is what cash equals. So cash is going to equal $17,112. So I did this in a journal entry approach to help you understand what accounts are involved and what's going on. But the question is asking how much cash. The answer is $17,112.